Hi everyone, and welcome back to the Independent Dollar. Today we're going to show you how, with just a few easy changes, you can pay your mortgage off years ahead of schedule. Make sure you also stick around until the end today because we're also going to be giving you some important questions that you need to be asking when getting a new mortgage or renewing your existing one. Typically, most mortgages are about 25 years long. Unfortunately, when you take out a loan over such a long period of time, you end up paying a lot more in interest than you probably realize. That's because sometimes as much as half, if not more of your mortgage payments, are just going towards paying down interest during the first few years of your mortgage. So what can we do to save on interest and get that mortgage paid off as fast as possible? Changing your payment frequency. You might have heard someone say that making your mortgage payments every 2 weeks instead of monthly can pay your mortgage off faster. But is that actually true? On a 25-year mortgage, simply making the change from a monthly to a bi-weekly payment can in fact reduce your mortgage by almost 3 years. Even though your new payment is exactly half of what your monthly payment would have been, on a bi-weekly schedule, you end up making 2 extra payments by the end of the year. This is probably the easiest way to pay your mortgage off just a little faster without really noticing much of a difference in your bank account. Because mortgages are such large loans and are paid off over such a long period of time, the smallest changes can make a huge difference on when you'll eventually become mortgage-free. Adding small lump sum payments. Another way to pay your mortgage off a little faster is to add an extra $25 every payment. $25 may not seem like a lot, but on a 25-year mortgage, you'll be mortgage-free almost 5 years faster. 5 whole years of not having to make a mortgage payment anymore just by adding $25 every pay. Increasing your mortgage payment a little bit every year. If you're in a job where your income increases every year, even if it's only a small amount, consider directing that added income to your mortgage. One of the most effective ways to get your mortgage paid off fast is to increase that extra $25 or whatever amount you can every single year. On the same mortgage, if you can increase your payments each year by about 5%, you'll be mortgage-free in under 15 years. On this mortgage, that means increasing your payments by about $40 every year. Not only will you be mortgage-free a lot faster, but you'll end up paying almost half the amount of interest. The great part about increasing your mortgage payment a little bit every year is you usually quickly adapt to the larger payment and not really notice the increase. It also works as a great safety measure if you ever lose your job or your income decreases. When you pay more of your mortgage off each year, you can go back into your bank and ask them to push back your amortization schedule to where you should be instead of where you currently are because of all of those extra payments you made. This will allow you to reduce your mortgage payments substantially if you really needed to, without having to worry about requalifying or having to go through the process of refinancing your home. This can be a really great method for those of us that have a hard time saving, since it's like a forced safety net. In some cases, banks will even reimburse you all of your extra payments if you needed to, but the rules are not the same at every institution. This is why it's so important that you really understand what type of mortgage you're getting so you know what benefits and options you have if you need to be a bit more flexible with your mortgage. So when taking out a mortgage or renewing your mortgage, here's some important questions that you need to be asking. How much can I increase my payment every year, and how much extra can I put down in lump sum payments every single year? If I pay more than I need to, can I access that money in the event of an emergency? What are the prepayment charges if I want to pay off my mortgage before my interest rate expires? And finally, what fees do I have to pay, if any, when I finally pay my mortgage off? Thanks so much for watching, and we'll see you back here next week.